AM Best has placed a stable market segment outlook on Vietnam's non-life insurance market. And here to discuss the rationale behind that is Chris Lim and Trung Tran, financial analysts in AM Best's Singapore office. And Trung, let's start with you. Compared with the rest of the region, what's the state of the overall non-life market?
Yeah, thank you, John. So I think on the Vietnam non-life market, one of the characters that I see for this market is very strong growth. So if I look back in the past 10 years, the growth rate has been one of the highest in Southeast Asia. And one of the very key reasons is, of course, the low penetration rate. But also, at the other hand, the young demographics as well as the rising middle income class is one of the major forces that also help to boost the demand for health insurance as well as the insurance for personal assets such as motor insurance. So over the past 10 years, we have seen a significant growth in this retail line of business, motor and health, and that's helped to boost up the growth for the Vietnam non-life markets. And if we compare the growth of this market with other countries in Southeast Asia, we see that there is quite a significant difference. For example, if you look at Singapore or Malaysia, you will see that growth is pretty low, like almost like 0% in some years. And for Thailand, it has been quite stagnant in the recent years. So strong growth is one of the differentiation factors for Vietnam. On the other hand, we also look at the balance sheet strengths as well. So one thing that I quite like about this market is that with regard to their investment portfolios, about 80% of the portfolio is placed in cash deposit as well as the treasury bills. So these assets are very liquid and we consider them are very safe. And so that because of that, it's helped them to kind of like provide some buffer against a pretty high underwriting leverage. Although it's high, but I think it's still quite manageable for the underwriting leverage. It's about 200% for the net underwriting leverage. And although it has been rising, but as I said, I think that level is still considered as manageable. And the other factors is in terms of the capital growth, which we think that has been growing in line with the total asset. So what is the reason? Is because even despite the very high dividend payout, there's still forthcoming capital injections into the market. And quite a substantial amount is also coming from foreign direct investment in the past 5 years. So that's helped to keep the asset leverage in check and also help to keep the underwriting leverage also under the control. So, and recently what we see is that there is new companies with a very huge capital size is approved by the regulators to join the markets. And this capital size is among the top 5 largest in the market. So on one hand, there's new capital injections, and on the other hand, the competition will be more intense moving forward.
Now, how has Vietnam handled COVID-19, Trung, and has there been any noticeable impact on the non-life insurance market?
So with regard to the handling of the health crisis, I think Vietnam is one of the bright spots in Southeast Asia. Give you some statistics. So right now, the most recent statistic that we see is that there's only about 350 cases in Vietnam compared with the other countries where we see 1,000 and more than 10,000 cases. And there's 0 deaths reported in the countries. So this number so far seems to be quite a success for Vietnam in their ability to handle the crisis. And so what have they done in order to manage the COVID-19? I think Vietnam is one of the first countries in the regions that impose very seriously the travel restrictions, introducing the social distance measures, as well as promotion of the use of masks, as well as the hand hygiene. And also I find that they spend a lot of effort and very serious in the quarantine activities. So right action at a very early times, I think plays a very important, very critical role in the country's ability to manage the health crisis. And of course, this helped to soften the disruption to the economies. I think the second part is about the impact on non-life insurance, right? Yeah, so I think, of course, there is certainly an impact on the economies, and subsequently, there will be an impact on the non-life insurance. So during the first quarter of this year, although we have not seen a significant drop in the premiums, the growth rate for the premium in the first quarter is around 11%. So it's not that bad. But we believe that the impact will be more felt in the second quarter onwards. So some of the significant, the more visible decline that will be seen in, for example, motor insurance, cargoes, or energy business. But on the other hand, I think that the crisis have raised the awareness on and the demand for health insurance quite significantly. And we think that this line of business will be kind of like a line of business that will help to counter the decline that we may see in other markets.
Now, the report notes that the US-China trade war will likely benefit Vietnam. Chris, how is that so, and how does this benefit Vietnam's insurers?
Yes, indeed. So the tensions between US and China, which have seen both countries diverting imports away from each other, are viewed to have benefited third-party countries. So in particular, Vietnam is viewed as one of the key beneficiaries of the trade war. As a result of US import substitutions and trade tariffs, which were imposed on goods from China, Vietnam actually had the opportunity to increase its exports to the United States. So furthermore, companies who are looking to diversify their production operations away from China have also made foreign direct investments in Vietnam. So this included industries ranging from electronics to apparel makers. Vietnam has attracted foreign direct investments across many sectors as a result of its young working population, relatively affordable labor cost, and its close proximity to China. So as we know, the non-life insurance market grows in tandem with the wider economic development. There are growth opportunities for the commercial insurance segment as companies seek to manage and transfer the risk of their business activities, while the personalized insurance segment is viewed to also benefit indirectly from longer-term economic growth. So to add on to what Trung has pointed out earlier, Vietnam had an early success in curbing the spread of COVID-19. So we believe that that is likely to enhance the reputation for Vietnam in attracting foreign investors over the long term.
So, Chris, what does AM Best expect over the next 12 months for Vietnam's non-life insurers?
Right. I'll circle back a little to what Trung has touched on as well. So given what we have seen so far, and as pointed out by Trung, the impact to the top line in the first quarter was quite minimal, but we would likely see a greater impact come through in the second quarter and onwards. So premium growth to the non-life insurance companies would likely be varied and would depend a lot on the portfolio compositions of these insurers. So companies have noted lower growth expectations across multiple lines of businesses, which includes motor, aviation, travel, energy, and marine cargo. However, given what we have seen as well, the strong growth in health insurance could counteract the reduced premiums seen in the other lines. So for some insurers, the growth in the health insurance may outpace the decline seen in the other lines combined. So for others, with a lesser exposure to health insurance, their premiums volumes could decline. Investment income will be another area. It is likely to be affected marginally by lower interest rates as a result of domestic monetary easing measures. For example, the interest rate cap for short-term Vietnamese dong deposits with maturities between 1 and 6 months was lowered by 25 basis points in March this year. So the decline in the investment yield would likely be felt more acutely for companies who are seeking to reinvest their funds over the near term. So we know that some companies have plans to make minor adjustments to reallocate part of their investments, which were in term deposits, towards higher yielding assets that includes corporate bonds. So the volatility in the domestic capital markets will be another factor. It could give rise to mark-to-market losses, but nonetheless, as we've observed, the balance sheet of the rated entities in Vietnam are viewed to be robust and generally capable of withstanding the financial shocks arising from the investment market volatility. And this is supported by their typically conservative portfolios.
Gentlemen, thank you both for taking the time to speak with us today.
Thank you, John.
Thank you, John.
That was Chris Lim and Trung Tran, financial analysts in AM Best Singapore office. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.